Is low inflation good for the market and good for economic growth? I'm going to answer that question in just a minute. Right now, we've got the market starting to move higher. This is a 5-minute chart right here, so you can keep an eye on it. HUT. That is a stock that I highlighted on Sunday. I liked selling the $15 puts. We were able to do that for 60 cents. We went out to the July expiration. Stock has been holding up well. It's been holding this breakout nicely. This is a stock that I would be willing to buy down at this $15 support level. We have the 100-day moving average providing support along with the 200-day moving average and that horizontal support level. Plus, it's getting close to the 50-day moving average. So multiple support levels. If the stock happens to pull back there, I'm a willing buyer. If not, I'm going to generate some nice income. So what's the market doing today? We had the CPI came in and it was a 0.1% increase, which is lower than the 0.2% that was expected. The market likes this news. In general, the answer to the question, is low inflation good for the market? The answer would be yes, because that keeps interest rates lower and that keeps borrowing costs lower for consumers and corporations. It also gives the Fed latitude to ease. So what we've been seeing over the course of the last 8 to 10 months is that globally, prices have been coming down and coming down. Now, the reason for that is that economic growth is slowing. You can take a look at oil prices, for instance. It's more of a demand function than a supply function right now. Because economic growth is slowing, the demand is lower. And that means that oil supplies are higher and the price starts to come in. We're seeing deflation in China. Now, that is another extreme. In that particular instance, you are actually seeing prices decline. And that is bearish because consumers are postponing purchases. They continue to see prices come lower and lower and lower, so they hold off for a better price. And they don't have jobs and they don't have money, so they aren't spending. They're being very, very cautious with their money. Central banks around the world have been easing because they've seen this coming. They can see that inflation is easing dramatically because of this drop-off in demand. You can look at the ECB. They just did their 8th rate cut in the last year. That is much more progressive than they had initially expected. So they are not concerned with inflation. They're concerned with economic growth. You can take a look at India, which just lowered its interest rates by 50 basis points. That is greater than the 25 basis points that was expected. Same thing. Economic contraction is the big concern. The PBOC has been easing for the last 10 months at a very fast pace in hopes of stimulating economic growth. And it's just not bearing out. So now you can also throw in the tariff situation and possible supply disruptions, and you can see how that is also going to impact demand. So generally, a low inflation reading, 2% annually, that is the Fed's target rate. So right now we're in a disinflationary mode. That means that the rate of inflation is starting to come in gradually. But we should be cautious to watch for prices actually starting to decline. I don't know that we'll get there in the US, but certainly other areas of the world have very, very low inflation rates between 1% and 2%. And I certainly believe that that's where we could get. So the Fed's mandate right now, let's take a look at the current market conditions. By the way, I did do a trade this morning on Qualcomm. That is probably the long that I'm going to suggest doing. I love this breakout above the 200-day moving average. You can see a nice horizontal breakout. It's got another horizontal level right here, that green line that we're starting to break through. These are our automated trend lines. Take a look at the 5-minute chart. This is going to be the stock that I suggest buying. And I bought it this morning at 160.35, so the stock is doing nicely here. Tends to be a grinder. You can also see how long red candle initially by the market, bullish hammer right in here, so they probed for support and the market bounced immediately. There also is a trade deal that was announced with China today. We'll get into that in just a minute. So yes, Qualcomm, I like it. I like the fact that it's been able to break out above that resistance level. So this is the bullish pick of the day. I also like Tesla. Let's take a look at that. And Tesla also is recovering after testing the gap up this morning. You can see the steady price action higher. Volume started to drop off during this last run yesterday. I would have liked to have seen continued strong volume on that. And you can also see how it's starting to get through the major moving averages, the 100-day, the 200-day, and it's filled in that little gap right there. So Tesla looks good too, but I like Qualcomm right now. So that's going to be my pick for today. And later on today, I might do a short video and we'll see how that turned out. I'm happy swing trading Qualcomm. I might also day trade it if I get really nice gains in it. So we'll see. Back to the market. So this reading in inflation is going to give the Fed room to ease. Now, there's an FOMC statement next week, but I'm not expecting them to cut rates. I believe that there is a 8% chance that they would cut rates, 92% chance that they don't. Full employment is their other mandate. So they've got inflation and they've got full employment. We are starting to see some signs of weaker economic conditions, especially when it pertains to jobs. We had 139,000 jobs that were reported for the month of May. However, 95,000 jobs were removed from previous numbers. So that number was not particularly strong. We're also starting to see an increase in initial jobless claims, 247,000 last week. We'll see how that number comes out tomorrow. In the Fed's beige book last week, they had announced that they've seen lots of job cuts nationally in the last 6 weeks. So that's going to be playing out. We also had Challenger Grand Christmas announce that layoffs are up 47% year over year for this same time period. So we're going to start seeing some employment issues. That also is going to pave the way for the Fed to cut rates. Perhaps they will set that tone next week during the FOMC statement, and that would be bullish. We also have triple witching happening next week. And what happens when large institutions roll positions is that if they see in any particular day that there is strong momentum in one direction, they will actually goose that move by unwinding and rolling their positions. So that's another potential catalyst next week. But the FOMC statement is going to be the big one. And we'll see if they are considering a rate cut in July. So these are all bullish influences that the market is currently going through. So the news cycle right now, and that was a mistake of mine for being bearish, was that I didn't properly evaluate the news cycle. I expected to see weaker job growth. I did see ISM manufacturing and ISM services come in, but the market didn't care about that. It was focused on other things like potential trade deal with China. There could be some other trade deals that come through. The big, beautiful bill, that is also a bullish potential catalyst, and a few Republicans still need to get on board with it. It is a massive tax cut. So that is a form of stimulus. When you put more money in people's pockets, it stimulates economic activity. It's also going to lower corporate tax rates, which is good for profit margins. So this is the bullish cycle from a news standpoint that we're currently in. So you've got temporarily the fundamentals and the technicals aligning for this small window, but And I'm going to go with the flow here. I'm going to wait for the technical breakdown before I get short, but I'm telling you that the bad news is coming. I'm starting to see global credit concerns. We've got a lot of debt that has to be issued. There's a 30-year bond auction tomorrow at noon Eastern, $22 billion. It's a small auction, but we're going to see what the demand for longer-term U.S. debt is. As of recently, U.S. interest rates have been climbing, and that's not a good sign given that we have to refinance $9 trillion in debt. A lot of our debt purchases are also our trading partners who are having to pay higher tariffs, or tariffs are being imposed on their goods, which makes them less competitive. So there are a number of crosswinds that are starting to blow, and I believe that that global economic weakness is going to start filtering into our economy, and by the end of July, we could see corporate warnings, because a lot of corporations are either going to be eating that higher tariff cost, that's going to reduce their profit margins, or they're increasing prices, which is going to decrease their revenues. We're also likely to see some supply disruption. So all of this news is pending. And my issue was that I underestimated the market's reaction to this current wave of positive news. And I felt that that negative news would be of greater impact to the market. Market really didn't care that ISM manufacturing or services had fallen. Also didn't care about the, what I feel was a weak jobs report last week. So in any event, right now we've got a market that is continuing to float higher on light volume, and you can see that we are within striking distance of the all-time high. This type of price action in here is dangerous because it's light volume and the market's floating higher because there's not this negative bearish news just yet. It's being discounted, in my opinion. And so as we float higher, these gains can easily be erased because you can see that the volume is relatively low. And that means that there is a low level of conviction. You can also see tiny bodied candles. Well, what does that mean? It means that there are always sellers keeping a lid on the market. Even though the trend is higher, there is still some selling pressure. And as we saw this morning, it was not go off to the races. There are plenty of bid checks along the way. So you can see this price action is a major tell for us. This is not go, gotta have them, off to the races price action. Lots of dips in here, which tells you that sellers are always nearby. These are things that you need to pay attention to. How does that impact our trading right now? Keep everything very short term. I'm sticking with day trades. I'm sticking with short-term swing trades. UPST is a stock that I also like. And in this case, I like the fact that it is above the 100-day and 200-day moving average. And I sold the $55 puts, which are right at those major moving averages. They expire a week from Friday. I sold those for 75 cents on the notion that if the stock pulls back and it tests this breakout, I'm a willing buyer in the course of the next 10 days. So this is a way that if you're not super bullish, you can still find really nice stocks that have technical breakouts, and you can sell some out of the money put premium to generate some income. So you're relatively passive because you are distanced from the current price action, and you have multiple support levels that you can lean on, and that increases our odds of success. So that's how I'd be approaching it right now. Stick with day trades. Look for some possible follow-through buying over the course of the next 4 weeks or so. As we start getting into the middle of July, the back half of July, when earnings announcements are going to be released, I'm expecting to hear some earnings warnings before Q2 earnings are released. So that's when I start to look for weaker economic numbers, a drop off in employment and Fed easing. So just so that you know, in the early stages of Fed easing, everybody's excited. Oh my gosh, this is going to stimulate economic growth. This is fantastic. But as the Fed cuts 2, 3, 4 times without any improvement in economic activity, the market starts to get very concerned. And this is what's been happening in Europe and other places around the world, China, where you're starting to see those central banks cutting rates and easing as much as possible to no avail. So be careful what you wish for. When the Fed starts to cut interest rates, initially it's going to be received well, but why are they cutting the rates? I hope this video helps you. Qualcomm is your pick for today, and I will be doing a couple of short videos through the course of the week. We will see you then. Thanks for watching.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.